about interest rate settings? We obviously had the RBA meet a bit over a week ago. They more or less told us because of the way that the transmission mechanism works and because of wage growth being a little bit more subdued, they don't need to do quite as much as, say, what the Fed is looking to potentially do. How do you see that divergence, and how do you judge that kind of, I suppose, easing of rhetoric from the RBA when it comes to future rate hikes?
I think there are sort of a few different factors there in their decision. One of it clearly should be how it's going to affect house prices, and it's starting to affect house prices, so they might want to sort of go a bit slower on the rate hikes. But when they do that and everyone else is increasing by substantial amounts, we'll have a drop in the currency, which we've seen since this discussion by a substantial amount as well. It's 0.627 or something today morning, right? And that's going to affect households in terms of their consumption and input of goods. That's going to affect inflation as well, and that's going to affect the economy again. So I think we just staying away from the global economy. If we don't increase interest rates in the same amount, it's going to affect the exchange rates and a different part of the economy. And they probably have done the analysis to know sort of which way they want to sort of be affected. But I think we're not isolated from the global economy at all, and these increases are affecting us, if not through interest rates, then through exchange rates.
Yeah, well, actually, I wouldn't mind just punctuating that point or highlighting it, perhaps, is the better phrase. I just noticed on the cash rate futures that we're seeing an implied rate of about 4% next year. That dropped after last week's RBA decision, but has increased again with, this sort of global interest rate fears about high global interest rates. From what you've just said, and perhaps what the market pricing is suggesting, is that to be inferred that maybe the RBA will have its hands tied because of those factors, and they'll have to keep hiking interest rates for the reasons you've outlined?
I think if the Fed has to keep raising interest rates, to some extent the RBA will have to go hand in hand with that.
Yeah.
Otherwise, there can be a substantial decrease in the exchange rate, which they don't want as well. It's going to hinder financial stability from a different angle, not from a housing angle, but from a different angle.
Yeah. Okay.
Yeah.
I find this fascinating because, as an academic economist, it's very, there's some differences between, the economist might get at a bank who tends to be a bit more short term, to have a different perspective quite naturally. From where your vantage